as much as they've tried, economies around the world are trying to tariff-proof their economies, but to what degree can they do this? What kind of moves do you think that people need to be focused on moving forward to see developing and the developed economies, how they could be dragged into this further?
Yeah, unfortunately, this has a ripple effects for frontier markets where I work, and 50% of my work is in Africa, and a lot of African countries are still dealing with the after effects of COVID, unfortunately, and not to even mention the cut from U.S. ODA that's focused more on soft power, but this is a ripple effect across the board. So the critical minerals that are coming from Africa that are being processed in China that are being used for consumer industrial products, the fact that these products are not being shipped because of these tariffs, some countries who depend on these revenues, tax revenues, are being affected because they can't support social services, that sort of thing.
You know, Nii, a lot of concern that there could be a global recession. What do you think folks should be looking for? What are some of the indicators that people should be monitoring to see if indeed that does happen and happen perhaps quickly?
Yeah, well, I mean, look, it's, what do they say? Once the U.S. sneezes, China may catch cold, that sort of thing. I don't think I said it right, but the indicators are obviously U.S. is the largest consumer block in terms of consumer spending. China is trying to change that a few years ago. You see, you saw the CCP trying to incentivize its citizens to buy more goods to produce, if you will, more consumer economy instead of just focus on economy, export economy, right?
Right.
So it's a glass half full type of thing. Whereas China was prepared for this, but they didn't. They expected this, but they were also expecting some of their citizens to sort of pick up the slack, right?
Yeah.
So I think going forward, what you're going to see is, I don't see this going on too long. I see certain countries that don't have bargaining power will strike a deal, if you will.
Yeah, and one thing that really strikes me in this uncertainty and the influence of trade policies and business investment, you said you do a lot of work on the continent of Africa. The Lesotho, we kind of profiled that small nation recently. It imports like $2 million worth of stuff from the U.S., but sends a couple of $300 million, mostly in apparel over there. And it's being hit in a very punishing way. So when you see this trade imbalance that the Trump administration likes to cling to, what's the problem with using that as a benchmark for everything moving forward?
I mean, it's even the most conservative economists have said it's not an apples to apples comparison, because let's be honest, the U.S. used to be a manufacturing had manufacturing prowess for all kinds of consumer goods. That shifted. That started with apparel, started with furniture. As economies scale, you get more intellectual. You go to low cost regions. China is not actually that affordable anymore. So eventually they're going to have to move to Africa, what have you. I will say this. It's funny how you mentioned about Lesotho. There's a op-ed that I'm writing about the surplus the U.S. has for services, professional services, financial services, and software. U.S. have overwhelming surplus that they're not even talking about. So yes, there is a trade imbalance when it comes to physical goods, but if you talk about professional services, PricewaterhouseCoopers, Accenture. So there needs to be a whole picture, because now with the AI, the digital trade globally, he's not even talking about that, but he campaigned on this promise of bringing manufacturing jobs back, and it's like it or not, he's going to push this till. Yeah. I think he'll push it till you see two things will happen. Yeah. One, the currency will devaluate, and two, you'll see jobs losses.
Okay. Nii Simmonds, thank you so much for your insight. We certainly appreciate it.